Welcome, traders, to another Tick Mill trading update with me, Patrick Munnelly. Want to update the S&P 500 view using the emini futures contract and identifies a potential trade plan for the session ahead. Looking first at the macro side of things, today we get ADP employment change coming up early this afternoon. Then we've got jobless claims and then services PMIs. So we want to keep an eye on those data releases as they might add to some short-term volatility. But really, focus is on tomorrow's non-farm payrolls, and I think that's going to be the major catalyst for some directional moves in the markets as we head into next week. I will update levels for non-farm payrolls tomorrow, obviously, and give some scenario analysis. But focusing on where we're at the moment, weekly time frame, we are teetering on flipping the weekly volume weighted average price bearish. We have our time window next coming up next week, where we can anticipate a potential pullback to develop in a more meaningful fashion. But for now, we are yet to test the support area that I talked about yesterday into that 54.90, 54.80 area. If we do hold there, there is the potential, and certainly if we get a market favorable number from the payrolls tomorrow, that we could see another final push to the upside into what will be a pretty momentous double top here with everything lining up in terms of scope and scale. But that's for tomorrow, I think. Looking at today, if we put up the intraday charts, I haven't got my book on here at the moment, but I've got a long running from 29, looking for an upside extension versus the 15 here into the 55.74. Now, from there, I'll be watching for bearish reversal patterns to reverse back into and add to my existing short. I'm running shorts risk free from 56.55. I'm waiting for a, uh, a a lower high to develop here on the intraday time frame before adjusting stops on that. And ideally, we get that into a test of this 55.70, 55.80 area. We have this volume node here, and we have this naked volume point of control from the sell-off that we saw on Monday sitting there as well. So really, this is going to be a key test for me today. I'm going to be paying very close attention. Any test into this 55.70, 55.80, I'm going to be looking to add to short exposure. And the alternative scenario is we fail the 15, take out the week low at 55.06. And then the other area of interest for me, as mentioned yesterday, is the 54.90 to 54.80. Note we do have a bit of volume developing here at 54.75, but that would be within the remit of any stop that I'd use. I'd be using a 15-point stop on an entry in this zone. So that would encompass that just about. And if we do get that breakdown, I'm looking for support to develop there, and certainly then think about a move up into the daily bull bear zone into that 55.70, 55.80. If we get a move through there, possible but less probable to my mind at this stage, then the next upside objective for me will be a move into the 5600 area. Um, which I'd be watching, paying close attention for potential sellers to emerge there, and I'd be looking for a move back from the 5600, 5610 to ultimately retest the 5580, 5570 from above, and then we'd see if we were going to stage a more meaningful upside recovery. But given the fact that we have this data, the non-farm payrolls out tomorrow, I'm expecting that we balance within this zone. As you can see, we've got fairly balanced price action at the moment with our volume point of control at that 55.36 area. I'm not expecting any meaningful excursion outside of the daily bull bear zone or the first support zone. But if we do break down the next area of interest on the downside, 54.60, 54.50. As always, traders, I'll update New York range levels as we head into the cash trading session. But for now, Plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.